Back, you're tuned into Market Fatafat, where we are taking you through all the stocks that are in focus today. And now on technicals, we are joined by Aditya Agarwala, who's the Head of Research and Investments at Invest4edu. Hi Aditya, thanks for joining us today. Aditya, you've picked out Balrampur Chini for us as the first stock. Strong moves coming on this counter. You know, it's seen some good gains. Even over the last 1 month, it has moved some 15-odd%. Is there more upside left? How do you look at this counter?
Good afternoon, Ankita. Good afternoon, Vinny. Thanks for the show. Oh, clearly, I think this is one stock which has been buzzing the markets and holding on to its gains. Look at the sugar stocks. Most of them have been performing well. And if I talk about Balrampur Chini over the last 3 months, if you take a look at the gains, it has been massive. And I think it has broken out from a bullish flag pattern. And you can see levels of 510 on the upside with an immediate resistance at 500. So if you buy at current levels, your targets would be 500, 510 on the upside. On the downside, immediate supports are at close to about 475, 480 odd levels. So the risk to reward is also in favor of going long at current levels. And if I add all the technical indicators, they are too suggesting bullishness. So overall, it's a very healthy looking chart setup. I think one should definitely look at Balrampur Chini.
Definitely looking at Balrampur Chini. Let's move on to the next stock. We have PB Fintech. That's in focus on the back of its earnings. Good set of numbers came in from the company. Look at the jump in revenue, 52% uptick there on a year-on-year basis. Company's EBITDA losses have considerably come down. 39 crores is what the EBITDA losses at versus last year 77 crores. Profit is what the company reported this time versus a loss last year. So 60 crore profit is what the company is standing at, as well as in terms of the margins also. Obviously, that would be an improvement coming in, though yes, EBITDA losses have seen a reduction, and that is why PB Fintech is trading with a very strong gain of 6% as of now. But let's move on and talk about some IPOs that will be coming out as well. We do have Saraswati Sari Depot that will be coming out with its IPO, and we are watching out for this, but IPO will be on 12th of August to 14th of August. Let's bring on board the management. We have Nikhil Dulhani, Head of Investor Relation, as well as Vinod Dulhani, MD and CEO at the company, joining in with us. Good afternoon, gentlemen. Thank you so much for joining in with us. What we want to talk about, let's start by talking about your IPO and utilization of the funds. Total issue size is 160 crores. Where will you be using these funds, and what is the deployment of this?
It's a big day for us. We've been in this business since past 58 years, and majorly our business is working capital intensive, and whatever proceeds we are raising, fresh proceeds, are purely for working capital, and it's going to be used for the working capital needs.
The funds will be utilized for working capital of the business. Is working capital intensive? Tell us that company is operating in highly competitive and fragmented industry. What is company's market positioning?
Our company, as industry is fragmented, it's sort of a positive note for us because of this fragmentation within the industry, and because basically what we do is we cater to retail outlets who are our customers, who procure goods from us. And what we do, we have a strong R&D team, and we have connect of 900 suppliers. So our strong R&D team reach out to 900 suppliers, gets best of the designs and procures it for our customers who are retailers. So this is sort of a challenge and bottleneck for retailers. It's not possible for them to travel across India because sari is being produced across India, and we make their life easier by providing them everything under one roof. So this is our biggest USP, providing all the sarees under one roof. If you look at our SKUs, we provide 3 lakh SKUs, which is a huge number in itself, and the kind of variety that we give is exceptional, and which also is reflected in our numbers. If you will see, our customer reach is, we cater to 13,000 customers. We've catered to 13,000 customers in 2024.
Okay, just furthermore, considering that the company's current operations are based out of 2 stores, how do you plan to expand your market presence and increase your market share?
A lot of market share is moving from unorganized to organized, and we being an organized player, so there are a lot of chances and for us to to acquire more market share. And how we plan to do it is simply, we are also, as I told you earlier, we are catering to 13,000 retailers, customers across Maharashtra, Goa and South, Maharashtra, Goa and other areas, majorly Maharashtra and South. And the focus is to get into men's ethnic wear, which is a new product that we are planning to get into, because we see there is the need for such product in our space, which is B2B, and no other organized player that we know of is providing such product. And apart from that, we are also getting into B2B online space, which will complement. Please note that there are not many B2B players online space based specifically in our product line. And as I've told you earlier, sari is known for its, sari as a product, it's known by its origin. For example, Banarasi sari or Mysore silk, Bangalore silk. And it's been it's a fragment industry because for Mysore silk or Bangalore silk, person has to travel to Bangalore, and for Banarasi, they have to travel to Banaras. But what we do, we give everything under one roof, and through our B2B channel, which is online, what we're going to do is, apart from the geography that we are covering right now, we can expand that through our B2B e-commerce.
Right. So also the sari industry is expected to grow at a CAGR of 5% until FY29. What are the company's growth targets for FY25?
We can't give you any targets, future targets, but what I can say is, I'll just point out two data points. As you rightly pointed out, one is industry is going to grow 5 to 6%. But one more data point I would like to add with that is market share of organized players is growing, and there is a vast scope, because if you look at the numbers, we are, as an organized industry in this, organized players in this industry are just 25 to 30% of entire market. So we have a lot of scope to grow there. So if you take these two data points, I think the numbers that will reflect in coming years will be better than what we've done.
All right, so that's the new kid on the block, and thank you so much, gentlemen, for joining us. Saraswati Sarees about, which is going to come out with its IPO. We will be watching out for that. But all the companies that are already listed are coming out with their numbers, and they are on our radar already. And let's get started with most stocks that are in focus. Gland Pharma is the name, another earnings candidate that's come out with its Q1 numbers. Let's look at the numbers. In fact, the stock is declining more than, it's down more than almost 5.5% now. But the numbers, we can see that there is a decline of 25% on a quarter-on-quarter basis in the net profit. The revenues, however, saw an uptick of 16%. The margins were also down with the cuts of 546 basis points on a year-on-year basis, and the EBITDA was also down 10% on a year-on-year basis. Jefferies has downgraded Gland Pharma to hold from buy, and they've cut the target price to 2,180 rupees. They say that the Q1 EBITDA PAT missed their estimates by 17 and 21% respectively. The base business profitability was much lower than expected. The Sensex turnaround is likely to take longer, and the downgrade rating, to a hold is limited, has a very limited upside to it. So that's why they're maintaining, a hold instead of a buy, and that's the reason why Gland Pharma is declining in trade more than 5% today.
Okay, let's move on. Jinay, ONGC in focus on the back of brokerage notes.
Well, yes, multiple brokerages note on ONGC. CLSA have maintained their outperformance with target price of rupees 330. We have buy rating from BNK Securities, Investec and Jefferies as well. Well, overall, what analyst believes is that the management have reiterated its guidance of ramping up its KG basin production from Q3 of FY 2025, and analysts believe that they are optimistic on this production guidance, but execution will be a key factor to watch out for. Also, if you look at the oil and gas production, it is expected to increase by 12% and 27% respectively over next 2 years. In front of valuations, analysts believe that currently the stock is trading with an attractive valuation with near-term trigger. Also, companies are trading at a healthy dividend yield. And on the back of this, if you look at the stock is currently buzzing up around 7.6%.
All right, coming to you then, Aditya, tell us, Apollo Hospitals is the name that you've picked out for us. Tell us, what are you seeing on this counter?
Ankit, it's been a healthy looking chart setup for Apollo Hospitals. Take a look at the last 6 months or maybe a year's performance. Stock has been making higher highs, higher lows, and now it's on the verge of a breakout from a consolidation phase. Resistance is at 6,800. From here on, if that is taken out on good volumes, I think stock can easily test levels of 7,600 on the upside. It's more of a medium to longer term play for 7,600, but 6,800 is an immediate from here on. On the downside, 6,600 is a support level. And if I plot MACD and RSI, both have entered into the bull territory. So they're suggesting that the bullishness in the stock is here to stay, and you can see higher levels in the stock in the coming trading sessions.
Okay, surely keeping an eye out on that. But let's move on. And media and entertainment industry bodies have written to the Karnataka government for a reversal of 2% cess on cinema tickets besides TV and OTT subscription fees. Let's go across to Sumita, who's joining in with us to give us all those details. Sumita?
Yes, stakeholders from the media industry have written to Karnataka CM Siddaramaiah as well as the governor of the state opposing the Karnataka Cine Cultural Activist Bill 2024 that seeks to impose a welfare cess of 1 to 2% on cinema ticket subscription fees and all revenue generated from related establishments in the state of Karnataka. The industry has not just written to the Karnataka CM but have also marked a copy this morning to the Ministry of Information and Broadcasting, Ministry of Finance and CBDT. They say that the bill in its current form raises several concerns and that it could hinder business operations and negatively impact the ease of doing business of OTTs in the state. They also say, and most importantly state, that the unilateral introduction and the passage of the bill without any prior consultation with industry stakeholders is deeply concerning, and that needs to be looked at. They also say that it is bound to have far-reaching consequences and adverse ramifications on all the parties concerned, including artists, including skilled and unskilled laborers and technicians and OTTs, along with the larger M&E ecosystem. But let's look at some other contentions that the bill really has. The other contentions include the imposition of the welfare cess. They say that it is excessive because OTTs already are subject to a high GST of 18%, and the bill will lead to double taxation. They also say that additional tax burden will increase subscription costs for consumers. In fact, it also says that the bill is contrary to the principle of one nation, one tax, and that was supposed to bring in uniformity in the taxation structure within the entire country, but that is not the case with the present bill. They also say that it will deter investments in OTTs, not just OTTs, but local investments, and hence industry bodies have urged the government for a more balanced and collaborative approach to be adopted before the proposed law is notified, and they've also said that it should align with constitutional provisions that have been framed by Parliament.
All right, with that, it's time for us to slip into a short break. Don't go anywhere, we'll be right back.
Welcome back, and you're watching Market Fatafat on ET now, keeping it going with the buzzing stocks. And we have Aarti Industries. Aditya, that's what you've picked out for us today, trading almost near that 52-week high level. Last 1 year, up 58%. But last 6 months, we did see a fall coming in and again a rise. So what is the word that you have on Aarti Industries now?
Most of these specialty chemical stocks are doing well for themselves. If you take a look at the last 1 month performance, all these chemical stocks are doing well. Aarti Industries is also one of them which has done well for itself, and I think it's time to look at that stock again. It's on the verge of a breakout from a cuff and handle pattern neckline, which is placed at 760 odd levels. Once it starts to trade beyond 760 on a sustained basis, I think it can easily test levels of 850 to about 900. That is the kind of target I'm getting on Aarti Industries. On the downside, 720 is an immediate support level. Look at the way the volume has been spanning out for the stock. I think the up move that we're seeing in trade today is likely to continue in the coming trading sessions as well. So one should go ahead and buy for a target of 850 to about 900 with the stop loss at 720 on the downside.
All right, that is Aarti Industries. But moving on to another name that is in focus today, Bata India is in focus on the back of its Q1 results and a brokerage note. Let's look at the results then. The revenue seeing a downtick of 1.4% on a year-on-year basis. In fact, the margins is also down 641 basis points on a year-on-year basis, coming in at 8.3% versus 14.7%. The net profit, however, saw an uptick of 62% on a year-on-year basis, and the EBITDA is also down 44% on a year-on-year basis. Citi is maintaining a sell on the counter, and they have the target price that they have given is 1,050 rupees per share. They feel that in quarter one also continues to disappoint despite multiple initiatives, reach expansion and product launches. Compared to the pre-COVID period, revenue CAGR was only 1.4%, which is the lowest in the last 9 years. So they continue to underperform. Other consumer discretionary and retail companies are on growth, but comparatively Bata is not doing that well. So they are maintaining a sell on this counter, and we can see the impact coming on the stock. Bata currently trading with cuts of 3%.
Okay, let's move on. Talk about the real estate stocks that have been in focus today. And why is this happening is that now obviously the government has proposed an amendment in the finance bill yesterday, and they said that now they'll allow an option for indexation relief for the properties purchased before July 23rd. So obviously that's a big relief coming in for homeowners, and we've seen all the real estate stocks that were falling. DLF is what we should point out. We should point out Keystone Realtors, we should have Brigade Enterprises, not Garden Reach. We'll get that corrected. Garden Reach is not a real estate company. So yes, Lodha, Macrotech Developers, Oberoi Realty, let's pull up all those charts over there. Obviously, the real estate stocks we're keeping an eye out on. We also managed to speak to Mr. Hiranandani, as well as the management of Keystone Realtor, Mr. Samji. So listen in to what they have to say.
People are very hyperactive with the high rates in the stock market. People are shifting for their investments from the stock market to real estate. You will see a pull into the real estate market, which is going to be unprecedented. It's already there in the marketplace, where people are buying properties in the mid and the higher segment. And this change in the law in terms of the tax benefit, you're going to see a bigger pull. So you will see a bigger boom in the real estate in the mid and luxury segment taking place once again.
All properties bought up to or on July 23rd would allow to be choose between a 20% tax with indexation or a 12.5% tax without the indexation. I think going forward, property investments will continue to be on top of the mind of most people because of the 12.5% tax going forward. We will definitely surpass, as is seen in this quarter itself, the number of launches that we have. So the overall outlook for 25, financial year 25 is extremely bullish. And given the market that I serve, that is the MMR and Mumbai market, which is extremely strong. We've seen a very strong June and extremely good July.
All right, Janay, coming to you with one of the top gainers today, Kredo Brands. Tell us, good set of earnings coming in for the brand. Tell us what is the report card looking like for this one?
Well, yes, we have seen growth across all of the fronts. If you look at the revenue, it saw an uptick about 4.5%, coming at 124 crores this quarter versus 118 crores Y-on-Y basis. Net profit saw a jump of about 14%, coming in at 10 crores versus 8.5 crores. If we talk about operational performance, then EBITDA jumped about 10%, coming in at 33 crores versus 30 crores. Also, EBITDA margin grew by about 140 bips year-on-year basis, coming in at 26.8% versus 25.4%. Well, the management said that they have added 5 new stores this quarter into their portfolio, taking the total front to 450 stores. Also, if you look at the SSSG growth for EBOs, it stood at 2.9% in Q1 FY 2025 compared to Q1 of FY 24. And on the back of this, if you look at the stock, currently it is trading with the gains of about 14%.
Let's move on to the next stock. Aditya, on the technicals, KPR Mills. What is the word coming in for KPR Mill? Not a one that I've seen on a lot of technical analysts. So it'll be interesting to know what targets are you keeping for this one. And given that the stock has in the last 6 months seen an uptick of 20-21%, so what's the word?
And most of it has come from yesterday, Vinny, after the Bangladesh news that we're getting. So most of the textile stocks were up and away in trade. Yesterday, today also it opened with a gap up. It has given some part of the gain from the highs, but I still believe it's a good stock to look at and maybe add in your portfolio. It's broken out from a trend line resistance on extremely healthy volumes, and the correction that we've got from the morning is a good entry point again in the stock. At current levels, I would definitely want to go ahead and buy the stock with a good support on the downside at close to about 900 and look for a target of 1100 to about 1200 on this stock on the upside. And along with that, the technical indicators which were just moving sideways have now entered into the bull territory again. So that tells me that there is some more room left on the upside as far as these textile stocks are concerned, and KPR Mill from them is one of the top bets, definitely.
Okay, let's move on to the next stock that we should highlight, and that is Lupin on the back of its numbers. Strong set of numbers that came in from the company. In quarter one, we are seeing a growth of 16% in terms of the revenue of the company, profit seeing an uptick of almost 9 to 10%, while margins also have seen an expansion. 23.3% is what the EBITDA margins came in at versus 18.1%. Key highlights: India sales, that saw a growth of 18%, North America sales up 28%, growth markets also seeing a strong growth of 27%, and North America growth was mainly led by new launches, which one is keeping an eye out on, which was offset by the single-digit price erosion in the base products and additional competition in certain key products. But surely new launches is something that we're watching out for. Also, in terms of long-term goals, they said that they are planning in complex generics. They are launching is regulated markets in regulated markets by 2028. 20 complex products launch what they are looking at. So surely keeping an eye out on that one.
All right, that was Lupin. But Aditya, you've picked out Alem for us. Tell us, what are you seeing on the charts for this one?
Looking chart setup and just take a look at the move from the start of this year, Ankita. It's been a massive up move as far as Alem is concerned. And then for the last couple of months, it has entered into a sideways consolidation. Now it's broken out from that consolidation phase. It's more of a rounding bottom pattern that I see on the chart setup. From there, it's broken out clearly on good volumes. So it's a resumption of the uptrend. Last 3 days, we've seen healthy volumes in the stock, and today it's up almost 3% on, again, good volumes. At current levels, I would be a buyer in the stock for a target of 6,000 to about 6,300 on the upside. Medium-term targets with the stop loss at 5,300 on the downside. So on all parameters, the stock is looking very healthy, and one should definitely add this stock in your trading and your investment portfolio.
Right, Aditya, that is Alem Labs that we're keeping an eye out on. But that was the last talk for today. So thank you so much, Aditya, as well as Jinay and Nagraj for joining in with us today on Market Fatafat. But let's move on and get in some updates on the Olympics front. Obviously, a heartbreak coming in, especially from Vinesh Fogart, where she got disqualified. Now, PM Modi rallies behind wrestler Vinesh Fogart after this disqualification, tweeting that you are a champion among champions, India's pride and inspiration. Meanwhile, he has also asked Indian Olympics Association to register strong protest at the appropriate forum. Let's go across to Karishma, who's going to get us more details on this. Karishma?
PM spoke to the IOA President PT Usha and sought first-hand information from PT Usha on the issue and the options India has in the wake of Vinesh's setback. He asked her to explore the full range of options to help Vinesh's case. He also urged PT Usha to file a strong protest regarding her disqualification if that helps Vinesh. So this is what the PM has done. He has tweeted in support of Vinesh Fogart. He's also spoken to the IOA President PT Usha and told her to file a strong protest, do whatever it takes. If there's any way we can help Vinesh Fogart, we can help her fight her final bout, because remember, she's just 100 grams overweight. That is what we have been given to understand. So now the PM also stepping into action to try and help Vinesh, because this is a setback that is not being easily acceptable to anyone. If we were to go by the rules of the UWW, then Vinesh cannot play the final bout. She will not even get a silver medal. She will in fact be ranked last in the UWW rankings, and she will not be eligible for any medal, and there will be no silver medal that will be given out, only gold and silver. There can be no appeal, no protest to this decision, is what we're given to understand as far as the UWW rules go. And the IOA also obviously making an official statement after weighing in all the options, after seeing whether there can be any legal route that they can take, whether they can file an appeal, whether they can protest this. But for what I know from my sources is that there can be no appeal to this. So we'll have to really wait and see if there's anything that the IOA can do now that the PM has also stepped in.
Also, a big statement coming in from ace Indian boxer Vijendra Singh. Vijendra alleges that there's a conspiracy to disqualify Vinesh Fogart. Let's go across and listen into that.
जी आई थिंक ये बहुत बड़ा एक सदमा है पूरे हिंदुस्तान के लिए, मेरे लिए और कहते कि हम इसको लफ्ज़ों में बयान नहीं कर सकते, इतना दर्द है, इतनी पीड़ा है, इतना गुस्सा है। और आई थिंक मैं मानता हूँ ये बहुत बड़ी कॉन्स्पिरेसी है इसके पीछे हिंदुस्तान के अगेंस्ट। तो जो भी इसमें इन्वॉल्व है, मैं बिकॉज एज ए स्पोर्ट्स पर्सन आई नो दैट सुबह वेट होता है। रेसलर का मुझे नहीं मालूम, रेसलर का शायद एक बार वेट होता है, उसके बाद दोबारा वेट नहीं होता। अगर ओवर वेट है तो उसको टाइम दिया जाता है 1 घंटे का, 2 घंटे का, कि आप जाओ इसको कम करो, उसके बाद दोबारा वेट करो। एंड सी इज वेरी प्रोफेशनल, सी नो दैट कि हाउ टू कंट्रोल द वेट, सी नो दैट।
Okay, on that note, we're absolutely out of time on this edition of Market Fatafat. Thank you so much for tuning in. And that's a goodbye from Ankita, myself, as well as the team who put this show together.